Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Monday, August 23rd, 2010. Well, the market continues in its first time frame uptrend. Today we had a candle with a lower high but a higher low, and that doesn't change the trend. For a change of trend we would require a lower high and a lower low, so the previous trend remains in force. Now, interestingly, the size of the body of the current candle has reduced quite dramatically. It's less than half the size of the previous candle. And that means that even though the bulls have made some net bullish progress on the day between the open and the close, it's certainly not as much as it was previously. So it means that the underlying sentiment of the bulls is becoming slightly weaker. So that offers potential for a change of trend. In bar chart terms, this is an inside day. Inside days are days of indecision, basically because the market failed to take out the high, so the bulls weren't strong enough or committed enough to take out the high of the previous day, so that creates indecision in the market. It says something about the lack of strength of the bulls again. Having said that, though, it doesn't mean that the bears are strong. There's really not any sign of any strength from the bears here, just signals that the strength of the bulls is perhaps starting to wane. Any potential change of trend would need to be confirmed, so we would need to see a lower high and a lower low. But there still is a possibility, and a very strong possibility, that the market will continue trending up because that previous trend is in force. Certainly the 83.22 level offers fairly strong resistance and extends roughly up to around 83.45 around this swing high, so there is some solid resistance up around here. If the market does trade up through that level, then there is potential resistance offered around the 84 region, where the market will begin interacting with the cloud. And there was some strong downside price rejection previously from around the 84.50 level, where we can see the shadows on the top of these candles as the market interacted around these levels. Now the market is trading down below the cloud, so we have an overall negative bias in this market. But the market is bullish in the medium-term and fast-term time frames, so we can see the market is trading up above the Kijun-sen and the Tenkan-sen. We also had a crossover a day or so ago of the Tenkan-sen above the Kijun-sen, which is a bullish signal in Ichimoku chart terms, but it's only a fairly weak one because the crossover occurred down below the cloud. Now, interestingly, the Kijun-sen has turned flat, and that tends to be an attractor of price action. So we do need to be prepared for a change of trend to the downside here. So certainly we should be watching this 82.86 level for a potential lower high and lower low. That 82.86 level will offer strong support for this market. So the market will need to be fairly bearish to trade down through there. And there is fairly strong support all the way down here around 82. There was buying coming in as the market traded down around these levels, so there is potential for support there, and certainly down to the Kijun-sen, which is around 81.76.5. So this is a market where we really do need to watch the area around the lows, around 82.86, the previous support for potential lower high and lower low, but certainly watch the area above the high of the market around 83.22 and this resistance area for a potential continuation of the trend to the upside and a test of the resistance areas up around 84 around the cloud.